Alright. Hey, what's up guys? We're gonna wait 30 more seconds here. I'm gonna jump right into what I want to talk about tonight. If you guys don't know what we're talking about, well, take a look at the title and the description box as always. The description box down below will be your best friend for every single one of my streams that I always do. Alright? Hey, what's up guys? Hello. For everyone who's just dropping in now, make sure you guys hit that like button down below. And the reason why I say that is that, well, it helps out with the YouTube algorithm. It lets YouTube know that people are enjoying my stream, whatever I have to say during the stream. And it really pushes out my content to people who aren't subscribed to the CFO channel. So please hit that like button down below. It really helps out. Especially if you guys enjoy my content here with the information that I give you guys, most importantly, applicable information. So if that is indeed the case, please hit that like button down below. It takes less than a second to do, so that's the minimum amount of support that I would love to see, right? I mean there's no maximum amount of support, but that's the only thing that I want to see. That's it, right? Especially if I deserve it, right? Yeah. Okay. Alright, so we're gonna dive right into the markets because that's the main topic of tonight. And the reason being is that, well, there's a lot of talk between, well, it's a very bifurcated landscape right now between bears and bulls, right? So both buyers and shorts. Let me actually bring the music down here. It's getting a little loud. Okay, I'm pretty sure you guys can still hear me and the music. Okay, perfect. So when it comes to this bifurcation between buyers and sellers here, clearly the answer should be written in the price action itself, and it is, right? Because right now, what kind of trend are we seeing now? I mean, it's pretty obvious, right? We're in an uptrend. Okay, now there are some pretty interesting fractal analogs and there's a lot of different analogies that I've seen across FinTwit and across other trading platforms, social media trading platforms, and I can understand why they're bearish into August so far, which I am also, but it's a specific time frame where I will be a bit more cautious. But in the most immediate term, right, the most immediate time frame, which is going to be, you know, the intraday, the daily, and stuff like that, right, or even the secondary trend here. Right, not even the primary, but the secondary trend, which is going to be daily and weekly, right, time frames. I am still very much bullish, right? Because of the fact that we had such an impulsive breakout to the upside after resolving this 2-month consolidation period, this phase, where I was actually completely pushed to the side with my bearish perspective, and we switched just like that, right overnight, and on the very next day, right? And we had a massive move up higher. So now this massive move up higher was actually one of the reasons why we saw a lot of shorts getting bared up, right? They're saying, oh, we need to short this rally to the upside and into new all-time highs here, and they continue to push the sell button while the price continued to move up higher, which led into covering their short positions, which means they had to buy back, right, on the market here, and that further caused more demand, right, and buying. So that just continued to squeeze the markets higher and higher and higher. Now, there is some validity to what they're saying, but I'll get into that later, what these shorts are saying, these bears. But if you guys are a reader of the CFO Single Watch report, or the overall CFO report, right, the trade report that you guys read or should have read last night, make sure you guys read that again and then come back to the stream, because I'm basically going to go over quickly what I read, what I wrote in the report, and also expand upon the report by continuing from where I left off. Okay, so yeah, so what I'm saying here is that this entire rally was, again, initially brought on by the complete asymmetrical buying from bulls on the specific AI trade, right, where we just saw just incredible amount of flows, call flows specifically into AI leaders, right? Well, obviously in the semiconductors, but some other tickers like in the hyperscalers or neoclouds, right? and that essentially caused a wider tech breakout to the upside. If you take a look at XLK, right? This is the tech sector here. We saw a big, massive move jump over to the to local highs and over the previous highs, making higher highs and officially into a new uptrend here with some good volume, right? Now, we go back to SPY though. Okay, hey Bueller, what's up, man? So, the reason why I'm staying bullish in the intermediate time frame, again, from the daily to the weekly time frame, we're gonna get into secondary time frame. We have, first of all, again, as I've said in the report last night, it's a very, very good chance that we see a continuation chart pattern to form up here. And again, continuation chart patterns are just simple, short-term, very quick sideways patterns during an actual directional trend that occurs, right? And so right now we are seeing a directional trend to the upside, and when we're going to move sideways, that's simply meaning that we're just having a little small pause in the directional trend before we continue that directional trend to the upside. Okay, and usually these high tight bull flags or bull pennants tend to form once we see that pause, quote unquote, phase occur. Okay, so what I mean by, well, not what I mean, but right now we're seeing this bull flag forming here, right? As, let me expand this time frame here. Okay. All right, so we officially have, first of all, guys, my SMAs, my daily 10 and my daily 21 SMAs, right? We have a very nice bullish crossover here. Okay, right here. If you guys don't see it, oops. Oh, maybe TradingView is not gonna allow me to. You guys get it right there. Okay, so this is a very nice short-term bullish crossover. Okay, and it confirms the fact that we are in an uptrend, basically in the short term. Okay, where we have the faster moving average crossing over the slower moving average, which is the 21, right? The 10 over the 21. And so, as long as the bull flag forms, that will allow my daily 10 and my daily 21 SMAs, again, this red and light blue line, to finally catch up to the price. And once it gets pretty close, I would say maybe around even just 760, or even just between 760 to like 763-ish, around here, that should allow enough bulls to say, okay, well, you know, we've consolidated enough, we have a nice flag. And if you guys don't see the flag, yeah, let's just use this. Okay, it's a very quick, I'll just make a very quick, there it is. Okay, so this is what I'm going to expect to see to form, and so that means we're most likely going to be chopping it out in the overall markets. And if anyone is confused as to why the markets can chop while individual tickers can move, well, first of all, let me actually backtrack there. Whenever markets move sideways like this after an initial directional move to the upside, or especially an impulsive breakout to the upside, well, people start to focus more on individual tickers that have yet to see a broader move that mirrors what the markets have already done in the previous trading days, right? And that's the reason why when we see the markets consolidate, that's probably one of the best times to be really focusing on leaders, right? Leading tickers that have yet to move in parallel with the markets, right? So again, I always see a lot of people say that there aren't a lot of opportunities when the markets are moving sideways, but that's hardly ever the case, especially with such an active market that we have now, right? With the market conditions that we have now in the market environment. So and so we've been seeing this happen since like 2023, right? Where the markets move sideways after an initial impulsive breakout or the first wave to the upside, right? Impulsive wave to the upside. And when that happens and the markets decide to consolidate and digest that move, we tend to see leading tickers that haven't moved in parallel with those with the markets actually catching up to the markets and kind of mirroring exactly what the markets did. And Bueller, yes, so many lag potentials that need to catch up. Yeah, exactly. So you got to see the bigger picture, right? And we've been seeing this kind of activity really since like 2023, since I've called the bottom in 2023 as well. So again, this is a great opportunity this week, right? As the markets just move tightly and potentially form this continuation pattern, this continuation flag pattern before we make another second leg up higher. All right, so that is my short-term intermediate perspective time frame here. Right now, let's get into the bigger picture here, right? So as you guys know, we've also actually resolved our dispersion here in the markets. So dispersion is officially back down, and VIX is also officially back down. So we have this coinciding parallel action from the VIX at lows and this market dispersion at lows as well. Oops. Oh no, Jesus, I can't type today. So this is great, right? And again, this was all triggered by the complete blowout of AI leaders completely taking the markets by storm again and blasting off to the upside without, giving retail enough time to get back into the AI trade. So I gave you guys two scenarios where I said that, well, there's only two scenarios where this dispersion in markets will be resolved. And I said either one, the AI trade is going to explode to the upside, or number two, we're going to see the overall markets correct, right? Because we saw VIX at highs, we saw VIX expanding, market vol expanding, while we saw the market dispersion at highs while market vol was relatively low and compressed, right? So, and again, that's kind of where we resolved that by seeing the individual AI group absolutely taking off, which eventually allowed the markets to take off together as well, and allowing the markets to finally get away from this odd dispersion cycle we were in for the last couple of weeks. Okay, so this is good, right? This is good, and this is the reason why I'm also very bullish on the overall markets, not just from the technical perspective. Now, the continued analysis that I didn't get to write in the report last night. Okay, we have to take a look at bonds. Okay, so bonds, oddly enough, they're actually seeing a massive move down today as yields continue to surge higher, right? We saw a 10-year yield moving higher. We saw even the 30-year yield breaking out as well, right? I showed you guys. It's kind of odd to be charting on yields, but hey, it works, right? It works. So we had this I talked about this multiple times if you guys take a look at my previous streams, but the 10-year yield here, massive flag that's been forming since 2023, and we've been tracking this since 2022, if you guys remember, this entire run up in yields. So this obviously doesn't look good, right? We have a nice symmetrical triangle here, or wedge, and it seems like the price is wanting to move up higher, right? We're sitting at 4.7%, and it looks like we're going to be targeting 5%, right? Again, so that's not looking too good for the longer term, since we're looking at the monthly time frame of the 10-year yield. Now, here's the thing though, okay? When you take a look at bond prices, which is inversely correlated to the yields, again, you guys should know that if you guys are trading in the markets, it's very, very important to know the relationship between bonds and equities, okay? And bonds and yields itself. What do you call it? The bond prices here saw a massive amount of volume on Friday. So we saw TLT and even the shorter term maturity bonds like IEF, right? This is the 7 to 10 year Treasury bond ETF, and IEI, right? Which is the 3 to 7 year Treasury bond. Oh, well, this one didn't have enough volume come in like what we saw in IEF and TLT, but you guys get the idea, right? So they've all kind of been moving in tandem with each other, but we saw TLT and IEF suspiciously getting massive amounts of volume last Friday. So I guess this was selling, right? Because today we ended up with a nice gap down and then a subsequent move lower. So this is interesting because to me, bonds were looking pretty much overextended to the downside, since I like to look at TLT, the longer term bonds here. Take a look at the monthly time frame, right? We are making lower lows compared to the lows that we saw back in 2023, right? This is where I also caught the market equity bottom here, or the equity markets bottom here, between the transition from October to November, if you guys remember. So we are below the lows of the low of 2023 in October. So to me, this seems like an opportunity for bonds to kind of have a little bit of a pivot, right? At the very least, kind of an exhaustion bottom here, where we can at least have a nice pivot back up higher. But after today's action, it doesn't seem like we're going to be getting that. So that is the reason why tomorrow. Okay, now listen here carefully, guys. Tomorrow, hey, what's up, guys? I see more people coming in now. Thank you guys for the likes. Make sure you guys hit that like button. For tomorrow, I'm thinking that we're gonna get a turnaround Tuesday. All right, it's a very trite saying now, but I like to say it, like with everyone else, right? Turnaround Tuesday, and the fact that we might be pulling back, right? But if you take a look at SPY, all right, I mean, based on how we closed today, nice little doji, which I actually expected to occur. We might just pull back and retest the lows of this potentially forming ascending support trend line, right, to make that broader continuation bull flag or bull pennant. So you know, the bonds are kind of, I would say it's kind of confirming my bias here, in the fact that the markets will be moving sideways tightly as we form this potential bullish pennant. Okay, let me make it a little bit more accurate here. Okay, maybe it's more like this. Okay, so a couple of more days of just moving sideways, right? So what's also interesting here is that with the relationship to the bond markets and the equity markets, bonds continue to, well, specifically the yields, the bond yields continue to add pressure to the markets, even though we're at all-time highs. But now we got to go to QQQ, right? NASDAQ. This is the ETF that tracks the NASDAQ index. So QQQ, if you guys remember last night in the report, I talked about how NASDAQ, well, first of all, there's been a complete macro leadership change, right? Where we're seeing the S&P 500 completely leading the overall tech group, right? The entire tech sector and the tech industry. And QQQ is a clear evidence of that. It's clearly showing us that there is a leadership change, and that's another reason why I told everyone in the report last night, to all my readers, that there's a chance that we're seeing more inflows into value, right, compared to growth. Okay, and there's a lot of value names in the S&P 500 itself, and right now I think we're seeing I forgot the exact number, but a little over 72% of stocks in the S&P 500 are above their daily 200 SMAs, and that includes value stocks, right? It's not just the Max 7 group. It's not just any other semiconductor or AI related tickers in there in the S&P 500. It's also the value tickers itself, right? The value companies that are also above the daily 200 SMAs. So we're starting to see the actual underlying, or at the very least under the hood, rotation into value groups and value names. And that's the reason why we might be seeing NASDAQ here, or QQQ, lagging behind, right? Even though, I mean, it's displaying the same amount, the same type of price action. We're kind of seeing the similar bullish pennant forming. But what is the main issue here compared to the S&P 500, right? SPY? Well, we are not at new all-time highs, right? We're not at the new price ranges here, right? We're still at the previous price ranges, which means there is a lot more supply that can smack the price right back down for NASDAQ if it shows any signs of weakness, right? So this is something that you guys have to look out for. And potentially, again, tomorrow, if we have that turnaround Tuesday, guys, because of the fact that we saw bonds moving lower today, gapping down and continuously moving lower and closing at lows too, by the way. The closing price is very important. That might weigh harder on tech, right? Because yields really matter for tech as well. And again, so far, again, we're still seeing some very solid consolidation, right? But for just tomorrow, watch out, right? You don't want to be buying when the markets are moving lower, especially as market dispersion has come back down, right? And we're kind of seeing the overall markets moving in tandem together, with individual tickers moving with the markets together, okay? So is everyone following with me along? Is everyone understanding what I'm saying? If you guys have any questions, please let me know, okay? Hey, I see you guys a lot of Let's see how many people are in here. Hey, there's a lot of people in here. Awesome. Make sure you guys hit that like button, guys. Okay, especially if you guys are comprehending what I'm saying. Hey, thank you, Bueller. Okay, now there's another what was I trying to say here? Oh, that's right. So interestingly enough, okay, crypto has been actually seeing some heavy selling today. So if you guys take a look at Bitcoin, okay, we saw a very nice move lower today, and I don't really like what I'm seeing so far, especially as as Bitcoin again has been moving sideways, just like with the markets before it exploded higher. And when I say markets, I'm talking about the S&P 500, since that is the benchmark that we like to use, that, well, everyone needs to use. Let me change my words there. So this sideways action resulted today with a nice push lower, and as you guys have known so far, since June, or right even before June, you guys know that Bitcoin has been the leading sentiment indicator, right? Whether we should be risk off or risk on in the overall equity markets. So this is confirming my current bias again for tomorrow for a turnaround Tuesday, as Bitcoin has shown early signs of weakness, and I wouldn't be surprised if Bitcoin today overnight decides to move up and rejects right at my daily 21 and my daily 21 SMAs. I don't care if my daily 10 SMA crosses over the daily 10, okay, since, well, it looks like it's about to do that, right? The daily 10 is curling upward, and it's right at the convergence point of the daily 21 SMA, which is now curling downward. But again, the candlestick is what matters so far. The price action matters so far. This previous one, which is again from earlier today, we saw a massive bearish candlestick that was also accompanied by this big jump in volume. So so it's interesting to see if we're going to see a continuation overnight as we dump up higher, right? And then we reject and we dump back down and we cross below today's low, right? This candlestick's low, or I guess yesterday's low at this point, right? So again, this is kind of showing us that early, one day early at this point, risk on or risk off indication or overall sentiment. So for tomorrow, again, I'm a bit biased. We might be seeing turnaround Tuesday, and I could be completely wrong, right? I could be completely wrong, and we can just see this. Maybe we've already formed this bull pennant, right, on the 4-hour time frame, right, or even the 2-hour time frame, if you guys see it or not, right? And we might be seeing another big bullish breakout. Who knows, right? But based on everything that we've seen so far, especially with the bond markets, as yields continue to hold down the markets and continue to allow the markets to actually move sideways, as valuation concerns continue to roam around the markets, as long as the macro perspective, the war in Iran, the crude oil prices, right, or the overall energy prices, or I guess the overall energy crisis around the globe continues to persist, we're going to see the markets continuously moving sideways as it continues to digest this impulsive move. Does that make sense? That is one thing that you guys can be sure of, right, for the rest of this week, right? And I could be completely wrong until we see the actual breakout to the upside, if the markets decide that we have indeed built a solid continuation bull flag chart pattern. Okay. My lemon sparkling water is very, very good. Ooh, but I'm having these small burps, so excuse me, guys. Ooh, should have just gotten a Diet Coke. For some reason, Diet Coke doesn't make me burp as much, but Diet Coke is supreme, guys. It reigns supreme. I can debate anyone on that. I know some of my friends like Dr. Pepper Zero, I think is what it's called, I think. But Diet Coke, the best. So, yeah, I mean, this is, you know, what I like to think is going to happen for the rest of this week. You know, this is my bias, but now let's segue into the broader bearish perspective that I know a lot of you guys have been reading online, and I mean, who doesn't check Twitter these days, FinTwit, or even just StockTwits, another very, very popular social media for traders. But yeah, so I've seen a lot of analogies of previous years of where we kind of seen a similar impulsive breakout to new all-time highs, while we're seeing continuous geopolitical tension, crude oil prices, again, everything that I just mentioned a couple minutes ago, right? And I've also even seen, I mean, it's pretty valid, but I've also seen this, right? We're seeing higher highs, right? Actually, let me use this, right? We've seen higher highs in the price, right? From this previous all-time high to this new all-time high, pivot points. Let me actually even make a little indication with the arrows. Okay, and then when we take a look at the RSI, right? Let me use the same arrow here, right? You guys clearly see the divergence here, right? We're seeing the RSI indicator, which is this momentum indicator, having lower highs, while the price is making higher highs. All right, so this is pretty valid, right? If we just simply focus on price to indicator values. Okay, and again, RSI is one of the smoothest, I would say the most relevant type of indicator, even though it is still a laggard, right? But again, this oscillating line that we like to call the RSI, the relative strength index, is pretty useful, especially when it's used for divergences like this, right? And so we have what we like to call a bearish divergence, and we can actually potentially break out of this divergence if we see that supposed second leg impulsive breakout to the upside once this continuation bull flag is completely formed, and maybe we can just move higher than the previous RSI print of 75.62 if we can do that. Right? But then again, if you take a look at the broader perspective of things here, and the fact that we've been making lower highs on the RSI since June, and again, June is when we saw that nice corrective move to the downside, and all the way up into the current price action, right? It's looking a little bit suspicious here, right? Especially as the overall average volume is continuously moving lower now. So again, the bearish perspective on the broader the broader time frames, like at least a secondary time frame, right? From weekly to monthly, or even just a daily to weekly, whatever you guys want to use for the time frame there. It's subjective at that point. It's looking pretty. It's looking a little wishy-washy in my personal take, but when it comes to the broader perspective for the rest of August, especially after OPEX. Now, that's a little hint there. If you guys read my report last night, there's a reason why I specifically talk about post OPEX for August. And the OPEX here, let me give you guys, so if you guys are always wondering what people are talking about with OPEX, right? Just look up OPEX calendar 2026, okay? And you'll see a lot of different websites that give you guys the OPEX expiration calendar, right? Okay, so MarketWatch has a great one. Okay, so for August, okay, there you go. So OPEX, all right, is coming up on the 16th. No, not 16th. What I'm talking about, the 21st. Okay, the 21st. All right. I was looking at October because I was thinking about the well. I'm not gonna tell you guys now. It's a little too early for that right now. But so August 21st, right? So we have 8/21 being the OPEX date, and what I've said in the report, I'm not gonna say it here. You guys have to be a reader for that. Post OPEX is gonna be very, very important. Okay, and if you guys can connect the dots here, right? It has something to do with this, right? With the RSI divergence and the price. The RSI divergence with the price. So. And there's other data that I provided in the report too that could, again, if you guys get my drift here, right, can't support that bias in the last half of this month. So yeah, I mean, the bulls aren't done yet is my general answer for tonight, as I've asked here in the stream, right? Is this it for bulls? Not yet. It's not yet quite there yet. Okay, as long as we continue to see supportive call flows, right? Supportive bids, we should be seeing that nice breakout higher later this week, possibly, as we will most likely pull back tomorrow, and that dip will be bought as you continue to have supportive flows into, again, OPEX. All right, a little hint there again as well. Okay, so with SPY, again, we have completely diverged away from NASDAQ or QQQ. And again, that's yet another hint as we're seeing underlying buying of defensive and value groups. As we've seen that over 72% of stocks in the S&P 500 are over the 200 moving averages on the daily time frame. And that's not just the Magnificent 7 stocks, the leading stocks in the S&P 500. That's 72%, over 72% of stocks in the S&P 500 who are now moving in tandem with the markets itself. Okay, so there is a significant money rotation that has occurred here between the singular tech trade that we've been following since this year began. Again, tech has been leading here. So you know, it's very important that you guys understand that if tech becomes a laggard, right? If it becomes the leading group to be weak, right? If this is the leading group that becomes weak here, then we need to watch out for the overall markets to follow suit as well. So there's a lot of divergences here that is happening right now, and you guys really want to see what could occur post OPEX for this month. Bam. And that concludes my stream tonight, guys. All right, so that might have been a bit short, but again, if you guys have understood everything so far tonight, and again, this is just an elongation of my analysis that I provided in the CFO trade report last night. Again, it's a weekly newsletter that I send out to everyone who is a reader. So if you guys are interested in that, just check it out in the description box down below. It's very hard to miss. It is the second link. Just click on it. The ball's in your court to choose whatever you guys want to choose. Once you click that link, you guys will know what I'm saying. Read through it. If you guys have any questions about it, please DM me on Instagram. I'm always there on Instagram at chartsfocus1. If you guys don't know how to spell it, just check out the YouTube channel here that you guys are looking at the stream, right? So again, very, very important that you guys understand what I'm saying here. Again, take this information lightly. I could be completely wrong tomorrow. Who knows? Again, like I said earlier, we might just blast up higher, right? Who knows? We might, the markets might say, screw your analysis to me, and just break up higher. And again, that's an experience that everyone experiences once in their lifetime when they trade, right? But again, I'm just using the data that I have here, the data that I like to use. We took a look at dispersion, VIX. We took a look at Bitcoin. We took a look at the overall bond market action, and we specifically looked at SPY. All right, and you guys can do the same analysis and translate this analysis to SPX as well if you guys follow the actual index, right? It's kind of the same. Right? I mean, it has to be the same. So okay, so if you guys use SPX, if you guys trade the SPX, then use that same analysis that I've given you guys. Again, take it with a pinch of salt. But yeah. Hey Keith, what's up? Thanks listening and learning here. Awesome. And again, yeah, if you guys find this information applicable, and if you guys are learning something here, even if it's something that you've already known before, but maybe I've allowed you guys to remember something from the past that you guys learned previously, well, hit that like button down below. And most importantly, guys, if you guys aren't subscribed to the channel, hit that subscribe button. And even more importantly, once you hit that subscribe button, hit the notification bell, because that will let you guys know when I have uploaded a new video or when I am live, just like right now. Okay, and for anyone again who is new here, check out my channel on YouTube. You guys can learn a lot. My live streams, my videos, especially my shorts, right? If you take a look, just go to my channel and then click on the shorts tab. you guys will see that I have a bunch of recently uploaded shorts that will provide you guys with a lot of market specific information, all right, and specifically on certain stocks as well. Right, I haven't really had the time to make some more videos. I know a lot of people have been enjoying them, the shorts here, but I'll be coming back to it maybe next week, hopefully by next week. I've been very busy with family as well too, so I will be going back to shorts. I know a lot of people are waiting for those. Okay. All right. Well, I will see you guys on Wednesday. Again, same time, 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. I have been going live a little bit earlier since it seems like a lot of people tend to join. A lot more people tend to join around like 7:30, 7:45 p.m. Pacific Standard Time. But again, it doesn't really matter when you guys join. You guys always have the opportunity to watch the actual replay of the stream. So please, please, I always want you guys to watch the replay from the beginning to the end, because I always talk about important, but most importantly, applicable information. All right. Well, that is it for me tonight, guys. I'll see you guys on Wednesday at the same time. I will most definitely go live a little bit earlier, maybe 15 minutes earlier like I did today. But yeah, hey, do nothing, what's up? Thank you to the goat. Thank you. So, yeah, I'll see you guys on Wednesday. Peace out. Good luck tomorrow. Hopefully this information proves useful for everyone for the rest of the week. I'll see you guys on Wednesday. Thank you so much for watching.